$100. This is big.
Welcome to the Fast Money Halftime Report. We're getting to the heart of the action as it is happening. The bulls remaining resilient today, refusing to give up control despite weaker than expected economic data. Financial stocks taking the reins once again. So where is the smart money going to work? Let's get to the word on the street. Right now, our Fast Money crew today, the monster, John Najarian, Greg Tricoli of Opelef, Eugene Profit of Profit Investment Management, and Patricia Edwards of Storehouse Partners. Certainly, there are a lot of concerns about the consumer, whether you read the claims numbers, the retail sales numbers, foreclosures. Patricia, it seems like it's pretty amazing that we're actually in the green across the board.
It makes no sense to me whatsoever, frankly. I'm kind of speechless over the whole thing. If you look at some of the retail stocks today, though, they're not doing so well. I don't think they should be doing very well. Any of the earnings numbers that we get over the next week or two, I think it's going to be all about cost cutting. We do not have demand for the consumer goods at this point.
Eugene Profit, do you think that we're seeing some short covering still in the market that is keeping us higher?
Yes, I do. I think that there's a little bit of investors who were late into the rally trying to jump in at the last minute, and I think it is a little bit late because the economic data you're seeing really doesn't support an extended expansion.
Are you seeing any clear activity, Dr. J, in the options market when it comes to investors taking one stand or another, bullish or bearish?
A month ago, as I wrote in Barron's, the unusual activity was setting up in Walmart, and that stock has performed admirably. It's up over $3.50 in a month. I think you stay with that trade, but I'm a little nervous about stocks like Abercrombie & Fitch, ANF, because they have earnings tomorrow, and that one's looking a little tired. It's put in a double top here, and I'm a little nervous about that one. I see put activity that indicates other people are nervous as well.
So there is some concern in the markets. Let's talk about the markets overall. Let's go to our chart of the day. And Greg, you're watching the key level here on the S&P 500.
Hey, Melissa, we're really in the trenches over the last 10 trading days. And I'm looking at the September chart, and that runs at about a 4-point discount to the cash. In the September chart, we've been right around 1,000 now for 10 trading days and counting. My problem is that although we can call it resilient and the market is staying quite buoyant here, it's also stalling a little bit, I think, and the moving average line's a little steep. So it wouldn't surprise me if we had a 20, 25, 30-point correction to the downside. I think it would actually be a bit healthy right now.
Okay, let's talk about the sector that is keeping us in the green today, and that is, of course, the financials. Led higher by Bank of America shares of stock enjoying a nice run-up after it was announced in an SEC filing that John Paulson had taken a large stake in the company, along with a stake in Regions Financial and Capital One. Sally Krawcheck, also Bank of America, apparently has bought tens of thousands of shares. Eugene Profit, of course, this is as of the end of the second quarter, but do you invest alongside the likes of a Paulson when you hear that he's getting more bullish on some of these financials?
Well, I wouldn't hear. I think that if you're looking at a 13F report, meaning he could have bought those shares in April when Bank of America was starting from single digits, and there's already been a 100% increase. There really is no earnings visibility, and you'll be waiting, I think, 2 years before you really catch up to where the stock is currently trading.
So if you're an investor, Eugene, in these stocks right now, you hold the stocks, you've seen it run up, would you recommend taking some profits given the nervousness in general of the panel about the markets?
Yeah, I would. I think that if you're looking certainly short term, you've had quite a run in some pretty weak names. And although Bank of America is going to be around, back in the first quarter, there was some concern that it would not be around, and that's why it was such a cheap stock. But at the current price point, I think that it's a position that I would be taking profits and look to deploy the assets someplace else.
Patricia,
and Melissa, I was going to say, don't forget that we're going to have a lot of foreclosures coming down the pike because there's such a lag from unemployment. When unemployment got bad, we're just now starting to see those foreclosures. You add to that the commercial real estate going south, and I think that the banks in general have got some headwinds going forward.
And we cannot forget that the disclosure in a 13F filing doesn't include a lot of other positions. Dr. J, you're the options guy here. It is possible, perhaps, that Paulson also has some hedging positions, which is mitigating his risk in some of these names.
That could well be, and I think that he certainly has called both the downside and now the recovery phase of the market. And I agree with Eugene that I think that those purchases that he made were in the rearview mirror by several months. However, I do think that it shows that there's stability in that space, and certainly if I owned these stocks, I wouldn't be exiting. I would probably be an aggressive seller of calls. But Melissa, Bill Griffith gave us a great lead in here. The reason we're treading water, quite frankly, is that we've got that huge auction heading our way, and we will move based on how that auction goes. Bill's nailed that.
Absolutely. Top of the hour as a reminder to our viewers. Next right here, mixed bag from the retail sector. Government reporting sales fell unexpectedly in July. Walmart beat expectations, raised its profit outlook for the year, but the same-store sales missed, and that is what is concerning to a lot of the investors out there. Patty Edwards, what happened to Walmart here?
Well, you know, you got to look under the numbers a little bit, and I'm not trying to make excuses for them, but part of the reason the numbers were down on same-store sales was because of grocery deflation, and then the effect of translating the currency on the international side of things. Given that, you know, the stock's run a bit, and I think that at 51, it's probably going to take a bit of a breather. I still think that they are probably the retailer for the next 5 years that is really going to win because of their cost controls and the changes they're making in the stores. But that's an investment, not a trade. I think on the trade, maybe you step aside.
Greg, what do you see in the charts for Walmart? Because it certainly has a nice spike today, but it's been fairly flat year to date.
Alyssa, I love everything Dr. J has to say, and I know he wants to stay long the stock, but for me, it's been an opportunity cost. It's been a 3-point rally in the last month where we have had a tremendous rally in the market overall. At around 50, 51, I just think you could put your buck to better use and other value.
Okay, let's move on here. We want to go back to the story of the day, and that is, of course, the financials, the big market leader today. Let's go to the floor of the exchange, check in with Steve Grasso,
wow,
the governor. They had the wrong nickname for you in the prompter. That's, you know, the trick about reading the prompter there. I was like, Steve Grasso, not the other Steve.
And
Steve,
I know the pressure is on me because Dr. J's on the phone to call you by your right name. So
I know.
I'm going to say, hello, Melissa.
I don't want to pull Dr. J. All right, Governor, what do you see here going on in the financials? What is powering them higher? And specifically, it is the money-centered banks that are seeing the big boost, not the capital markets banks.
First of all, Paulson's a great headline story, but for the last couple of weeks, we've seen short covering coming into these banks and guys getting long. We've seen people putting new money to work in all of these names, and as Dr. J said, the whole space is more stable than it was a couple of weeks ago, months ago.
New money. So where specifically are the institutions going? Is it, in fact, these sort of regional banks, or is it sort of these Morgan Stanleys and Goldman Sachs of the world? They're very different animals here.
It all starts off with the Morgan Stanleys, the Goldman Sachs, the JP Morgans, and then it trickles down through the whole space. Guys doing their homework, but the whole sector at this point is being bought. And when you see Paulson go in, guys are using that as a headline number.
At the same time, you know, these are, of course, as of the end of the second quarter. We should point out that Paulson, as of the end of the second quarter, held 7% of the ultra-short financial ETFs, Steve. And we're watching Goldman Sachs and Morgan Stanley practically approaching their double for the year. Just because money's flowing in doesn't mean that it's smart money.
It doesn't mean that it's smart money. What we've learned since August of 2007 is even the smartest is pretty dumb occasionally, right? So nobody guessed this market. Everyone is perplexed. Hedge funds is perplexed as this market goes higher.
All right, Governor.
Problem is every day they get run over. The bet is on the bulls right now.
Okay. Governor, thanks for being with us. Always appreciate your insight from the floor of the stock exchange. On Fast Money tonight, it has been 40 years since Woodstock, and the baby boomers are still talking about it. We've got a trader who was live on the scene to tell you how you can profit from this never-aging population. Up next, Power Lunch has instant reaction analysis of the government's $15 billion 30-year auction. Fast Money Halftime Report continues after this. Who wants to be